You don't go to a baseball game to watch somebody score a touchdown. You don't go to a taco stand to order a cheeseburger. And you don't go to your local watering pub and think it's a confessional. So why would you go to your A-Paper lenders to get your non-QM deals? The big reason why? A-Paper lenders are going to run everything automated. It's in their DNA. When you go to a non-QM first company, you have actual underwriters who manually, traditionally underwrite these files, and when exceptions need to be made, and that's what happens on non-QM, you actually have underwriters who are trying to find a way to say yes, not no. Yes. Take your non-QM deals to non-QM lenders. Oaktree is fantastic. Look at their bank statement loan for self-employed folks. Their rates are exceptional, and their DSCR loan is absolutely fantastic. They've been doing this longer than anybody in the business. All you have to do to learn more on the products and how to market them is click this banner right over there. They can't wait to talk to you. All right, so did you guys know that FHA is looking at a 40-year loan modification right now? It's allowing servicers to add 120 months to your existing 30-year fixed rate loan. How do you guys feel about that? I mean, let's think about this for a second. That means if you buy a home when you're a spry young age of 35, and yes, that's how I see it, that means you wouldn't have your house paid off until you were 75 years old. Now, this is a really big issue. Why? Well, because the traditional and smart idea is that you have your house paid off when you retire. Your income goes down after you retire, but your housing expense all but disappears if you have the house paid off once you get the pink slip to your house. So again, you get the house when you're 35 years old and you have a 30-year mortgage. Your home is paid off when you're 65 years old or about the time that you're going to retire. On a 40-year loan, that means you retire and you still got 10 more years of that house payment that you probably can't make on your retirement income. Quote, a recent report published by the FHA revealed that as of December 2021, 7.28% of FHA loans were seriously delinquent, down from a seasonally adjusted high of 12.04% in March of 2021. However, the rate is still elevated compared to pre-pandemic times. All right, let's think about this. Their solution is to turn those 7.28% seriously delinquent FHA loans into 40-year mortgages. Now, if HUD does that, and they probably will, that means FHA will have 7.28% seriously delinquent 40-year mortgages. Because if you're not paying on a 30-year, you ain't gonna pay on a 40-year. Now, see, I have a solution for these loans right now. These 7.28% seriously delinquent loans. Here's what we do. Let's foreclose on every single one of them. And here's how the math works. As of 2019, the United States population was 329,500,000 people. The average household size in 2019 was 2.54 people per home. That means there should be 130,753,968 homes in the United States. Of those, 62% of them are owned by the people in the house. That means there are 81,067,460 owner-occupied homes. Of those, 9.61% have an FHA loan on it. So that means there are 7,790,582 outstanding FHA mortgages. Of those, 7.28% are seriously delinquent, or 567,154 FHA mortgages.
You stupid.
They're not.
What's 9 plus 10?
21.
You stupid.
That, in my estimation, should be foreclosed on immediately. Why is that? Number one, try as you may, these mortgages are not going to get paid regardless of the modifications that you're doing. We've already been down this road in 2008, and we already know how it works out. Number two, the existing non-payee homeowner leaves with a boatload of money courtesy of Uncle Sam's stupid forbearance policy. Forbearance is a good idea. How they did it, not so smart. Number three, you created much-needed inventory and listings, which brings money and commerce into all of our communities. Number four, the new homeowner, for which there are many suitors on every single house right now, will pay their taxes, and that just helps everybody out. Because keep in mind, these approximately 567,154 seriously delinquent FHA homeowners are not paying their mortgage, and by extension, they ain't paying their taxes either, are they? The second half of this whole equation that FHA just brought up to us, a 40-year mortgage. Is that good or is that bad? What do you guys think? Now, I already told you that a 40-year mortgage generally gets you past your retirement age. So, better question, why a 40-year mortgage? Why? Why should we have one? Simple, you can afford to buy more home. That's the only reason. Longer term, lower payment. If that's the case, why not just get a 100-year mortgage? You think I'm nuts? Or you think I'm not being serious? Guess what? They've been offering these in Japan for a long time now. So how does it work out, or how did it work out? Here's a quote. A recent innovation in the Japanese real estate industry to promote home ownership is the creation of the 100-year mortgage term. The home encumbered by the mortgage becomes an ancestral property and is passed on from grandparent to grandchild in a multi-generational fashion. We analyzed the implication of this innovation practice, contrasted it with the conventional 30-year fixed-rate mortgage popular in Western nations, and explore its unique benefit and limitations within the Japanese economic and cultural framework. Through the use of simulation, the conclusion is reached that the 100-year mortgage, or by extension the 40, the 100-year mortgage has failed to increase the affordability of homes. Instead, affluent homeowners are more likely to employ longer-term mortgages as an estate planning tool to reduce inheritance taxes. So longer term, like any financial obligation, turns out to be an instrument to be gamed by the wealthy and useless for the poor. And think about this for a second. If we stretch out mortgages to make them more affordable, people will simply bid them up higher than they already are. The longer the term, the more property values go up. There has to be a point when we just draw the line in the sand and cut this one short. But what do you think? Let us know in the comments down below. Share this. It's always helpful for us over here to keep bringing you great information. Talk to you guys on Friday. Cheers.